In a remarkable turn of events, Bitcoin has surged past $123,000, setting a new all-time high. This unprecedented spike is driven by strong ETF inflows and a shift in regulatory sentiment in the US. Here's everything you need to know about this pivotal moment. As Bitcoin stands firmly above its new highs, the cryptocurrency market is buzzing with anticipation about what could happen next. Recently, Bitcoin surged past significant resistance levels, capturing the attention of both institutional and retail investors alike. This surge can be attributed to a combination of factors, including increased institutional interest and a wave of optimism surrounding potential Bitcoin exchange-traded funds, ETFs. The recent approval of several Bitcoin ETFs has led to a substantial influx of capital into the market, reinforcing the narrative of mainstream adoption. Historically, Bitcoin has faced skepticism regarding its legitimacy as an asset class, but these recent developments are shifting perceptions. However, this rapid ascent raises concerns about sustainability. Profit-taking is a common reaction among investors when assets reach new highs, leading many analysts to predict a potential correction may be on the horizon. Additionally, macroeconomic indicators such as inflation rates and interest rate decisions by central banks could introduce volatility into the market. Regulatory developments, both positive and negative, will also play a critical role in shaping investor sentiment. The impact of these dynamics is multifaceted. On one hand, sustained buying pressure could solidify Bitcoin's position as a legitimate asset class, attracting more institutional players and fostering long-term investments. On the other hand, any sign of regulatory crackdowns or adverse economic news could lead to sharp sell-offs, unsettling the market and causing panic among investors. Looking forward, market analysts suggest that trading volumes and regulatory announcements will be pivotal in determining Bitcoin's trajectory. The coming days will be crucial in assessing whether Bitcoin can maintain its upward momentum or if the market will experience a significant recalibration. Investors must prepare for both opportunities and challenges in this rapidly evolving landscape. The journey to Bitcoin's new all-time high has been shaped by a series of developments over recent months. Recently, Bitcoin surged past previous records, driven by a combination of favorable regulatory changes and growing institutional interest. This year has seen Bitcoin experience significant volatility, with major price fluctuations often reflecting changing regulatory attitudes and evolving market sentiment. The rise in ETF applications and approvals has been particularly noteworthy, as these investment vehicles offer a pathway for traditional investors to gain exposure to Bitcoin, thereby fueling optimism. Key decisions by U.S. regulators aimed at creating a more favorable environment for cryptocurrency investment have also played a crucial role in this upward momentum. The anticipation of legislative support during the ongoing Crypto Week in Congress has further shaped investor expectations, signaling a potential shift in the regulatory landscape. In previous cycles, Bitcoin's ascents to new heights were often followed by sharp corrections. However, this time, the market appears to be reacting differently, with a broader base of support emerging across numerous cryptocurrencies. Factors such as increasing adoption by mainstream financial institutions and growing retail interest highlight a significant shift in how cryptocurrencies are perceived. Institutional investors are actively seeking diversification, while retail investors are increasingly viewing digital assets as viable investment opportunities. The impact of this renewed interest in Bitcoin extends beyond price appreciation. It fosters a more robust ecosystem for other cryptocurrencies as well. This shift could lead to greater innovation and development within the industry. Looking ahead, the landscape for cryptocurrencies seems poised for sustained growth, particularly if regulatory clarity continues to improve. Investors are likely to remain optimistic, anticipating further advancements that could solidify Bitcoin's position in the financial markets. The implications of Bitcoin's new all-time high are profound and far-reaching. As of today, the total cryptocurrency market capitalization has risen to an impressive $4.13 trillion, marking a significant rebound from previous downturns. This surge in Bitcoin's price often serves as a bellwether for investor sentiment, typically attracting new retail investors and revitalizing interest in alternative cryptocurrencies, known as altcoins. Historically, Bitcoin's performance has been a strong indicator of market trends, and its recent rise indicates a renewed confidence among investors. The Fear and Greed Index, a popular market sentiment gauge, has also risen to 63, reflecting an increasing risk appetite among investors, which is particularly noteworthy given the volatility that has characterized the crypto space over the past year. This shift is significant for those involved in the cryptocurrency ecosystem, as it suggests a potential influx of capital into the market. The past year has seen dramatic price swings, but this recent uptrend signals a possible stabilization that many have been hoping for. Furthermore, institutional interest remains robust, with major financial players investing heavily in Bitcoin and other cryptocurrencies, signaling confidence in their long-term viability. This institutional backing is crucial as it lends credibility to the market and encourages more conservative investors to participate. The immediate consequences of this bullish trend include a heightened expectation of price stability and growth in the crypto sector, with many investors now eagerly contemplating potential future gains. Additionally, this resurgence can positively influence traditional financial markets as more investors diversify their portfolios with cryptocurrencies. The broader economic implications cannot be overlooked. As cryptocurrencies gain acceptance, they may reshape investment strategies and financial products, leading to increased integration into mainstream finance. Looking ahead, analysts predict that this renewed interest could lead to further innovations in blockchain technology and decentralized finance, potentially revolutionizing how we think about money and trade. As regulatory frameworks continue to evolve, the future landscape of cryptocurrency is likely to be marked by both challenges and opportunities. With Bitcoin continuing to break records, its trajectory will be closely monitored, and many expect that this momentum could pave the way for unprecedented advancements in the cryptocurrency space in the coming years. On June 2, 2026, Bitcoin achieved a historic milestone, surpassing $123,000 for the first time in its history. The surge began in the early hours, specifically around 3 a.m. Eastern Time, when Bitcoin traded at approximately $121,000. Within just a few hours, it rapidly climbed due to significant inflows into Bitcoin exchange-traded funds (ETFs). By 8 a.m., Bitcoin's price skyrocketed, reaching $123,400, with trading volumes hitting record highs. This surge can be attributed to renewed buying interest from institutional investors, who have increasingly viewed cryptocurrencies as a hedge against inflation and market volatility. The backdrop for this price surge includes a favorable regulatory environment in Washington, D.C., which has provided much-needed clarity to the market. Lawmakers have been actively engaging with industry leaders to craft legislation that balances innovation with consumer protection. Notably, news of a crypto week in Congress has emerged, where lawmakers are set to discuss critical crypto legislation aimed at fostering growth in this sector. This legislative focus has generated optimism across the market, further fueling Bitcoin's ascent and signaling a maturing landscape for digital assets. The impact of this price surge extends beyond just market participants. Financial institutions are now reevaluating their strategies concerning cryptocurrencies, with many considering the integration of digital assets into their portfolios. Retail investors are also taking notice, as Bitcoin's ascent draws more individuals into the crypto market, potentially leading to a new wave of adoption. This influx of interest from both institutional and retail investors could signify a shift in the perception of cryptocurrencies, positioning them as viable investment options. Looking ahead, analysts suggest that Bitcoin's momentum could continue, especially if the anticipated legislative developments in Congress yield favorable outcomes. As institutional investment increases and regulatory frameworks become clearer, Bitcoin may solidify its position as a mainstream asset class. Furthermore, the ongoing discussions around cryptocurrency regulation will be pivotal in shaping the market's future. The balance struck between innovation and regulation will define the trajectory of digital assets, particularly as more investors seek opportunities in this evolving landscape. As Bitcoin pushes to new heights, what will be the next pivotal moment in this evolving narrative? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.